You can get approved for up to a $75,000 Upstart loan with bad credit and get the money the next day. Upstart is approving people with FICO scores in the 500s. I'm talking charge-offs, collections, even folks who've been denied everywhere else. And the crazy part is they're getting funded within 24 hours with no W-2s, no tax returns, and in most cases, a lower APR than their credit cards. One person got $8,000 at a 5.5% interest rate. Another was approved for $30,000 with a credit score in the 500s. And one got approved for $32K after getting denied by another lender just the day before. So I'll show you the odd little document Upstart might randomly ask you for during your application. You'll never guess what it is. And plus the 4 silent deal breakers you'll have to watch out for before you hit accept on any offer that they send your way. If you miss one of these, that easy loan could turn into an expensive headache. And by the way, if you're tired of getting hit with hard credit pulls, especially when you're just trying to find out your odds of getting approved for credit, then you got to check out my free credit card pre-approval master list. I keep it updated monthly, and it has over 70 plus cards that you can get pre-approved for without a hard credit pull. I'll leave a link to that below so you can check it out. Now, Upstart is a fintech lender that partners with 100 plus banks and credit unions to offer personal loans from $1,000 now up to $75,000. But unlike traditional banks, they don't rely on your credit score. Instead, they use AI to look at a full picture, including your income, job history, education, location, and bank activity. That means someone with a 620 score but 90K income could get approved, while someone with a higher score but no income might not. And they also move fast. Most borrowers are often funded within 1 business day after approval. Like I said before, the loan amounts go from 1K all the way up to 75K. But here's a real quick heads up. Upstart sell page still says the max loan amount is $50,000, but I got word directly from Upstart via an email that the new limit is now $75,000. So if you've got strong income and you need a bigger loan, it's worth checking out. For the loan terms, you can get a loan from 3 to 5 year repayment plan. Then the rates go from 4.6% to 36%. They do have an origination fee from 0% to 8%, and that's going to be deducted from the funding amount that they give you. There's no prepayment penalties, and they have a soft pull pre-approval. That's where they check your rate without hurting your credit score. So this first person got approved for $8,000. So someone pulled off one of the cleanest credit card debt consolidation plays that I've ever seen, and they did it with Upstart, and they had a rate of 5.52%. So this person had 7 cards and 1 personal line of credit totaling just over $7,200 in debt, all carrying high interest rates. They've been getting weekly offers from Lending Club for years, but the rates were always just outrageous. And it was the same with Upstart, actually. They checked the platform back in 2021 and were quoted a sky-high APR, so they passed on it. Fast forward to January 2022, they randomly logged into Credit Karma and saw another Upstart offer. For whatever reason, they decided to try again, and this time they applied and got $8,400 loan to cover the balances plus a cushion. And just like that, they were pre-approved instantly. Their APR was 5.52%. Origination fee was $390, and they were funded just over $8,000. Their monthly payment ended up being $160.51. So they hit submit. They took the hard pull on both Equifax and TransUnion and were approved for the exact terms quoted in the pre-approval. A few days later, the money landed in their Schwab checking account, and by the next day, all 7 credit cards and the line of credit were paid down to 0. So before the loan, they were throwing $250 a month at minimum payments that mostly went to interest. Now they're paying $160 a month, and more of it is actually hitting the principal. They're saving hundreds in interest every single month and plan to pay off the entire loan in just 2 years instead of the 5, knocking out would have been $1,600 in interest over the full term. Now here's some key data points for them. They had a TransUnion FICO 8 score of 630, an Experian FICO 8 score of 615, and their annual income was $92,000, including $5,000 bonus they fought for and won. They had 7 open credit cards with $9,600 in limits. They had a personal line of credit for $1,000. And as for their remaining balances, they had 2 small cards, one at a $200 balance and one going to 0 by the end of the month. Oh, and by the way, before we get too far, if you're thinking about checking your own offer with Upstart, just remember it is a soft pull to check and see if you're pre-approved and for what credit limit. So you can check them out just by hitting the link below. Now there's another person who got a 30K approval. So this person had all their FICO scores in the 500s this time, with 6 accounts and collections and 12 charge-offs. So on paper, most banks wouldn't give them the time of day. But despite the credit damage, they had something a lot of lenders overlook: a strong, consistent income. They were approved for a 30K personal loan with Upstart. And yeah, the APR, it was high, but they weren't upset about it. In fact, they said Upstart was the only lender willing to extend an olive branch when no one else would. And that meant something to them. But what really stood out was how fast and simple the process was. So they got pre-approved online. All they had to do was link their bank account, and within a few minutes, they were approved. Then came the hard credit pull. The loan docs were signed, and then the final APR came in slightly lower than the pre-approval. The funds were set to hit their account the very next business day. And during the application, Upstart actually asked them to upload their college diploma. It's not something you'd expect from a personal loan application, I'm assuming, right? But it shows how different Upstart is. They're not just pulling a credit score and calling it a day. They factor in education, income, employment, and more than that. And they want to really understand the full picture of what you're coming with. So after they got the money, they plan to pay off their collections and charge-offs and then try to get them removed from their report. And then once their credit scores improve, they wanted to refinance their mortgage to wipe out the loan faster and then escape the high interest. And they even admitted that they started second guessing if they were really approved because it all felt too easy. That's how smooth the process was. But it was real, and it gave them the momentum to rebuild. Now, another person got a $32,000 approval. So this person had about $39,000 in credit card debt, all at brutal APRs between 23.5 to 29.9%. They really hit the point that a lot of people reach where the payments are getting out of hand and interest is eating them alive. So they decided to finally take control and consolidate with a personal loan. They started by checking pre-approval offers on Bankrate and got options from Avant, Upstart, and Happy Money. After comparing a few things, they leaned toward Avant because the origination fee was lower at 5% versus 8% on Upstart. But here's the part they didn't think about until later, and that was the reviews. So Avant had worse approval odds, stricter document requirements, and some pretty rough feedback online. But they didn't even realize that until after they applied and got denied. And unfortunately, that denial triggered a hard inquiry, which would come back to haunt them just a day later. So next, they went to Upstart. This time, they were instantly approved. And then just as quickly, they got denied. And that's because that recent hard pull from Avant raised the red flag in Upstart's system. But instead of giving up, they reached out to Upstart, sent in proof of their Avant denial, and within a day, they were approved again. So let's go over the loan terms. They had a loan of $32,000. Their APR was effectively 13.2% all in, because it actually did start at 9.48%, but the origination fee brought it up. Now, their monthly payments were $682 for 60 months, and the funds were deposited the next day because they got approved before 5 p.m. Eastern time. Now, compare that to $1,200 per month in minimum credit card payments before this loan. And that freed up $400 to $500 per month, which they were now using to pay down the remaining $9,000 in revolving debt and then accelerate their payoff strategy. And they estimate they'll save between $15,000 to $19,000 in interest compared to staying in credit card debt. Now let's move on to how to get approved with Upstart. So the first thing is you got to know is that income matters a lot. All three borrowers had strong income, even with their credit profiles weren't ideal. One made $92,000 with a recent bonus. Another had bad, credit with 500 scores, but still got approved for $30K because of high income. Upstart's algorithm just puts significant weight on income and employment, not just credit scores. So if your income is solid, you stand a real chance even with blemishes on your report. Then number two, education and job history are big factors. One borrower was asked to upload their college diploma, which shows Upstart evaluates education and career potential, not just financial history. So this isn't your typical FICO-only underwriting model. They're trying to measure real life stability and future ability to repay. And three, Upstart pre-approvals are accurate, but final approval requires clean timing. The $32K borrower got pre-approved, then denied due to a hard inquiry from Avant just one day prior. So what they did is submit documentation showing that they were denied by Avant, and then Upstart reversed the denial and funded them the next day. So hard inquiries can trip up your approval even after pre-approval. So you want to avoid applying with multiple multiple lenders close together unless you're ready to explain your situation and provide proof. You can get approved with a credit score in the 500s. Seriously. One of the most surprising and encouraging patterns I've seen is that multiple borrowers got approved for large Upstart loans with credit scores in the 500s. One person had a FICO score in the 500s, 6 collections, and 12 charge-offs, and still got approved for 30K. So this isn't a fluke, it's part of how Upstart works. Unlike banks that auto-reject anything under a 660 or so, Upstart looks at the bigger picture. If your income and education is strong and consistent, they're often willing to give you a shot, even when your score says otherwise. This makes Upstart one of the very few legit lenders that gives people in credit recovery mode a real chance to move forward. Now, before I get into the 5 deal breakers that you absolutely need to watch out for with Upstart, you want to make sure to hit that subscribe button to let me know that you want to see more content like this. It's the only way that I know for sure that I'm creating the right content just for you. Now, here's what you got to watch out for. First is the double hard pulls. So based on multiple data points, Upstart may pull both TransUnion and Equifax. So plan accordingly. If you've already taken recent inquiries, it could affect your approval. And the loan terms can slightly shift. One borrower saw their Truth in Lending report show 7.5%, even though the effective APR was 5.52% due to how the origination fees are calculated over time. So understand that the real cost of the loan includes the origination fees. So read the fine print and calculate that total repayment cost. And also the reason for the loan matters. When I personally applied with Upstart, I received a $6,900 pre-approval, and I listed the reason as weddings and events. But looking at dozens of other real-world approvals, the largest loan amounts and the best APRs consistently went to people who selected debt consolidation as their reason for borrowing. So if you want a pro tip, with this loan specifically, always select debt consolidation. It's a proven approval trigger in Upstart's algorithm, while more discretionary reasons like weddings, travel, or events may cap your offer or raise your APR. And then you want to avoid APRs over 30%. Seriously, avoid those. Yes, Upstart offers rates as low as 4.6%, but they also go up to 36%. Several people in the community have been tempted to accept loans in the 25 to 36% range out of just desperation. But really, a loan at 30+% isn't a solution. It's predatory. Only proceed if it's absolutely a last resort for you and you have a clear short-term payoff plan. And I'll be honest with you, they offer me a rate of almost 36%. That was all I needed to see to know that it wasn't the right move for me, even though I got pre-approved. So just because they say yes doesn't mean it's a smart yes. But listen, Upstart's pre-approval is a soft pull, so there's really no harm in seeing your offer. Just make sure that you read the fine print and run the numbers before you move forward. And then pre-approval isn't a sure thing. Yes, Upstart's pre-approvals are solid, but they're not bulletproof. I've seen some cases where people got pre-approved, then denied later because Upstart couldn't verify their education or because their credit report raised too many red flags after the hard pull. One of my readers even said that they were pre-approved for $2,400, but then denied due to too many recent inquiries, high credit card usage, and a credit file that was too thin or too new. So while pre-approval is likely, 90+% accurate, just like with credit card offers, it's still conditional. So be ready for Upstart to double check your file and back out if things don't line up. Okay, let's assume you get approved for 50K. And I know getting approved is exciting, but knowing how to use the money strategically, that's where the real magic happens. So here's 2 of the most powerful plays that you can make right after the money hits your account. First thing you can do is boost your credit score before a major loan. So let's say you're planning to buy a home or lease a new car or apply for your first round of high limit business credit cards. You've been working on your credit, but you're still stuck in the high 500s, not quite where you need to be. Now imagine this. Use part of your Upstart loan to pay off those credit card balances that have been dragging down your score. Your credit usage drops almost overnight into the single digits, and then your score jumps 100+ points. That's what happens when you use the money to fix your credit instead of blowing it. And then what you could do is season a new business bank account. So if you're planning to build business credit, this next move is just pure gold. Banks love to see healthy cash flow in business checking accounts. It signals that your business is real and active and not just some paper LLC with a dream. So here's the play. Take $3,000 to $10,000 from your Upstart loan, deposit it into a brand new business checking account, and then start running a few strategic transactions through it. Pay your website bill, a contractor, and software subscriptions. And this works because it gives the appearance of strong revenue right out of the gate. And it builds a relationship with the bank, especially if it's one that you want to apply for a credit card or a line of credit with later. In some cases, banks will actually pre-approve you for business credit card products right there on the spot when you open the account. And that's how you flip a personal loan into a business funding plate, and before you even apply for your first business credit card. And speaking of seasoned accounts, that's exactly what Wayne did before he got approved for a $25K business line of credit with Wells Fargo. So click on the next video here to see how Wayne always finds the right banker and gets them to treat him like a VIP, and why his first application got denied and how he flipped it into a $25,000 approval. Thank you for watching.